What's up, guys? Let's go into the disclaimers. This video is for entertainment purpose only. Nothing should be taken as legal advice or investment advice. So just enjoy the entertainment. And if you have any questions or comments, post them down below. Investing is risky. You can lose money. You can lose more money than you even invest if you go short or use margin. So make sure that you always contact financial smart people, before you invest, and make sure you make proper investing decisions for your own standards. Don't be like an ape like me who's going to YOLO stuff. You only live once and possibly lose all our money. But yay. Hey, that's what we do. We YOLO. Anyway, let's jump into the video. So we talked about this yesterday. So huge news. The chart isn't really updated yet here on Microsoft Bing, but we talked about yesterday if GameStop was a possible buy if it held the $80 to $90 resistance spot. And what we saw is, we'll pull up another chart here in a second. All right, so here we go. We got the chart. This is from Robinhood. I do not endorse Robinhood whatsoever. This is just the brokerage that I have, and unfortunately, it takes time to get money out and transfer. But do not join Robinhood. Robinhood is public enemy number one, in my opinion. They are the ones that have screwed everyone over that has been in GameStop since last Thursday. They're the reason for the price spike down to this now $94.55 price. They halted trading on Thursday, and ever since then, it cratered. If you go back and look at the charts, you can definitely see that. So we take a look at the 1 week. You can see this is when Robinhood just, because today we're at Wednesday, for example, and Thursday was when this big spike happened. Robinhood halts trading right around this mark, and then just craters. They halted trading all throughout the last week. We got some good news from Robinhood today that they said they upped the shares to 100, but I mean, really, they're still limiting trading, and that's great news. Shares higher. You can buy 100 shares on Robinhood now, but it's still very, very small. 100 shares at $100 is approximately $10,000. So it's nothing really, like, people have a lot more money than $10,000 that they want to throw at GameStop, for example, but you can't if you're on Robinhood. So at this $90 to $80 price range, if it can stay there, it has support. So let's go back to the day chart here. It had a lot of support. It jumped back up, and you can see then the shorts, hedge fund guys are going to push back. It's a battle. It's a war, guys, and it's been so entertaining to watch. It's been thrilling, exhilarating. It's been just mentally exhausting to see all the corruption in action. Honestly, like, this was in the bag last Thursday before Robinhood halted trading. Last Thursday, it was hovering right around $300 to $400, upward trending. And that's the thing. This is a momentum trade, in my opinion, which means as the momentum is in your favor, things keep going up and up and up and up. It keeps going in that same direction. And that's why holding the line at $80 to $90 yesterday to today was very, very important, because we need a green day. If you're on Team GameStop, if you're on, Diamond Hands, and you want this stock to skyrocket and go to the moon, and you think that's what's going to happen, you want a green day today. No, I changed that. You need a green day today. If you do not get a green day today, if we do not start, getting this forward momentum and moving up, if we do not get a green day, if we don't end today at over like $100, this is going to be terrible for morale of the troops and terrible for momentum. That means you're still on this kind of like somewhat downward, maybe stable trajectory. It's not really moving much. It's going to go up and down a little bit. The day traders will make a ton of money. So the people that really, really know the stock market and know what they're doing are day traders. And they've been doing this for years, for multiple years. They're not like us retail investors who, started 2 months ago investing in stocks. Like, I don't know shit. I'm stupid ape. Ape stronger together. That's all I know. Donks go up, right? That's what we know. But these day traders, they know these peaks and valleys, these charts, they candlesticks, all this other jargon that we don't know. We don't know this stuff. We're learning. We're learning things about this. We don't know, 10 days ago, we had no idea what a ladder attack was. We had no idea what a gamma squeeze was 10 days ago. Like, these are stuff that we are learning, but these day traders that have been doing this for 10, 15, 20 years, they know this stuff. So they're looking at their charts. They're looking at their like minute to minute. I don't even think we can go in closer here on Robinhood. But they're looking at minute to minute, and they're looking at numbers and crunching things and data. And they're like pinpointing. They're like, okay, at this point, we're going to sell. and then they start selling, and then they're like, okay, no, we're gonna hold, and then they're gonna like, no, we're gonna hold, and then now it drops, and they're like, okay, we're buying here, and so now they're buying, and now they're pushing this up. So this is why you see these price fluctuations, in my opinion, is that you have these incredibly smart people that are day trading back and forth, that are buying the low and selling the high, because that's what you do in stocks. You always want to sell the high and buy the low. That's how you make money. So people are doing this actively, and that's why you're seeing these massive fluctuations in price and value, is because people are selling high points and buying low points, and they're gaining money. That's why, so diamond hands is a very interesting philosophy. It's like, yeah, hold and stocks will go up. That's the theory behind that in the Wall Street Bets Reddit. In general, it's a good theory, but there was too many apes and monkeys that didn't follow through with it. So, myself included, paper hands here, folded around the 250 mark. But when you look back at the history, that actually was a correct decision to fold at 250 and then come back and buy back in if I wanted to at this 102 price point. My money is still transferring over to Webull. Highly recommend anyone that wants to, buy GameStop, get off of Robinhood, go to Webull. Webull is a way better platform. It is free still, free options, free stock buying, no fees there. But yeah, get off of Robinhood. Get off Robinhood. We will also give you 4 free stocks when you put down $100. The link is down below. I'll put it in the comment section as well. But yeah, so you get a nice bonus for just joining Webull. So definitely check that out. That's like a minimum of $20 approximately that they get you. You can get up or higher than that, but yeah, it's like a minimum of $20 in those 4 free stocks that you get when you invest $100. So Webull is a great platform. They've only limited trading like one time, and it was a very small time on that Thursday. Like, a lot of brokerages did limited trading on Thursday. Like, it was nothing as severe as Robinhood, but they did limit trading somewhat on those days. So you do have to be aware of that. They didn't have as many users, obviously, as Robinhood, so that goes into the factor of why they limited it slightly or smaller amounts and didn't do as dramatic as Robinhood. But they also did it way more like helpful for the retail environment. Like, Robinhood limited trading during the pre-market, and in the pre-market the stock can go up or down with no safety net. There is no you've seen it now. So if you've been following the stock, you see these are they're called circuit breakers. Like, Monkey learned this word, circuit breaker. 2 weeks ago, had no idea what a circuit breaker was, right? Well, that is when the stock market halts to trading on the stock because the stock has gone up too much or the stock has gone down too much, approximately around 15% within, a few minutes. It's a rapid price increase or a rapid price decrease. And so what they do is they stop it, they halt it to make sure that, everyone has a few seconds, a few minutes to think and breathe, and not just purely momentum, purely euphoria going through there. And it just gives everyone a chance. Okay, calm down. Let's go. Let's make sure things are, running properly. And then they open up the trade. They stop it for about 5 minutes and then open up the trade. And so you've seen a lot of circuit breakers in GameStop is because it's gone up so fast. It's gone down so fast. And so these things don't happen in the pre-market. So that's why we saw this incredible drop from 350 down to 120 in the pre-market area. So the drop, almost all of that happened during pre-market, which there was no safety nets involved. It's like, okay, we're just going for it. Boom. If Robinhood would have delayed their announcement by about 30 minutes, it would have been during the trading day. The active trading day had not happened yet, and it would have started in about 30 minutes prior to as of their announcement. So if Robinhood wanted to actually help out the retail investors and be fairer about this, they would have done this announcement at 7:30 or 6:31 Pacific Standard Time, right when the markets opened up. That would have been a lot fairer way to do it, in my opinion, because now at that point, you have these safety nets in place where the stock can only go down 15% at a time, roughly. It'll get paused for 5 minutes, and then people will be deciding what they want to do. It will open back up. Stock will fall down 15% again. It will pause again. people can think about, see what they want to do, etc., etc. So the panic wouldn't be as dramatic as doing it during or after, like during the pre-market or, the post-market. So pre-market and post-market are both places where there's no safety nets, and you can see crazy price manipulation and price adjustments happening in those times. Anyway, guys, that is what we're talking about. We're going to be taking a look at this and hopefully jumping back in. If we can get back in around the $80 to $90 price point, that's where I think it's a great buy to like just jump in. You can see it hasn't really got lower than about $95, it looks like, at this graph over here. So like, yeah, if you can get around the $95 price point, it might be a great deal. But you also have to look at the other side. What's the upside? How many short sellers are left? The data is looking a little bit grimmer. It's looking like it's down. It's looking like it's down to like 50% short sellers left. So it doesn't look like there's much squeeze to be squeezed anymore. You have to make your own decisions, do your own research, check things out. Don't just use Wall Street Bets, because Wall Street Bets is strictly like 100% in favor of GameStop to the moon. No counter arguments roughly. There might be a few things being said on there, but they'll get downvoted into oblivion and you won't see them. So make sure you do other research besides just Wall Street Bets. But if you're just looking for memes and looking to have fun, check out Wall Street Bets. It's amazing. Love Wall Street Bets for that.